Imagine finding the best entry and exit points in the market in just 1 minute. That's what we're going to learn in this video. When the word scalping comes to mind, many people immediately think of fast and risky trading. That's right. Scalping is an incredibly fast and precise trading style that is not for the faint of heart. But if you learn how to use the right tools, this method can become a great source of income. In this video, we're going to look at a great combination strategy, EMA 10 and EMA 17 on a 1-minute time frame, along with the Fibonacci tool. This strategy will help you find both accurate entry points and the right exit targets. It doesn't matter if you're a beginner or have been trading for several years. This tutorial can change your perspective on scalping. Before we get into the details of the strategy, we need to first understand what exactly EMA 10 and EMA 17 are, and why they are so useful in scalping. EMA stands for Exponential Moving Average. This indicator is basically a line that shows us the price more smoothly. But its main difference from a simple average is that it gives more weight to new data. When we use EMA with periods of 10 and 17, we are essentially checking the speed and direction of the short-term trend. EMA 10 is faster, so it reacts to price changes sooner. EMA 17, on the other hand, is a bit slower and can help us filter out whether the change is really valid or just momentary noise. Now, why do we put these two together? Because when EMA 10 crosses above EMA 17, it is a sign of a downtrend. Conversely, when EMA 10 crosses EMA 17 from below, it means that an uptrend is likely to begin. These crossover signals are the main basis for our scalping entries. Now that we have become familiar with EMA 10 and 17, it is time to see how they can be used on the 1-minute time frame. The 1-minute time frame is always full of entry and exit opportunities due to the high speed of price movement. But this very speed can cause many to get confused or enter the wrong trades. This is where EMAs come to our aid. On the 1-minute time frame, we are looking for fast crossovers between EMA 10 and 17. When EMA 10 crosses EMA 17 from below and moves upwards, it can be a buy signal. Conversely, when EMA 10 crosses EMA 17 from above downwards, it is a sell signal. But the important point here is that not every crossover is valid. For confirmation, we should definitely pay attention to the candles that form after the cross. If the candles are strong and there is a decent volume behind the move, that signal is reliable. We need to be patient here, because in the 1-minute time frame, if you enter without patience, you can easily get caught in simple noise. So the main thing in this time frame is only take crosses that are backed by real power. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. So far, we have understood that the EMA 10 and 17 cross gives us an entry signal, but it does not end there. One of the problems of scalpers is that they do not know where to exit the trade or where to enter more precisely. This is where the Fibonacci tool comes into play. Fibonacci is actually a series of levels designed based on mathematical ratios. In financial markets, these levels strangely play the role of support and resistance. When we see a strong upward or downward movement, by drawing Fibonacci on that wave, we can find the possible price reversal ranges. Now, what happens when we combine EMA and Fibonacci? Very simple. When EMA 10 and 17 give us an entry signal, we use the Fibonacci tool to determine the exit target. For example, if a bullish cross occurs and the price consolidates above the EMAs, we set the target at the Fibo level of 1.618 or 2.618. This way, our trade becomes targeted. On the other hand, Fibonacci can also act as a filter. If the EMA cross signal occurs but is close to a strong Fibo level, we should be cautious because the possibility of a reversal is high. So, Combining these two tools allows us to have both an accurate entry point and a logical exit point. One of the common mistakes among traders is that they only pay attention to the entry signal and ignore the stop loss or exit target. In scalping, because the time frame is very small, exiting even a few seconds late can wipe out all the profits. For this reason, using Fibonacci to determine profit and loss limits is a real must. The best way is to wait for a confirmation candle to form when the EMA 10 and 17 cross. Then we draw Fibonacci from the bottom to the top of the previous move. Now we see that the price usually pulls back to one of the Fibo levels, such as 0.5 or 0.618, and then the main move begins. That is where our entry becomes more logical and safer. As we said, for the exit target, you can use the levels 1.618 or even 2.618. Many professional scalpers prefer to close half of the position at the first target and the other half at the next target in order to both have a secure profit and not miss the continuation of the trend. Finally, combining EMA with Fibonacci has a great advantage. This strategy is both simple and flexible. That is, it works for both beginners and professionals. One of the mistakes that many beginners make in scalping is that they only look for entry signals and do not take risk management seriously. While the principle of profitability in scalping is proper capital management, not the number of trades you open. The first rule of scalping is to never risk more than 1 to 2% of your capital on a trade. Because in a 1-minute time frame, you may get stopped out several times, and if you place a large volume, your account will be empty very quickly. The second important point is a clear stop loss. Many people in scalping think that it is possible to work without a stop, but this is dangerous. Always place your stop loss behind the last candle or an important Fibonacci level. This way, even if the market moves against you, your losses are controlled. The third principle is to be calm. In a 1-minute time frame, the market is full of noise. If you take every small move seriously, you will get tired very quickly. You should only focus on clear signals. Remember, scalping is not about making big profits every day. The goal is to make small, safe profits. So when you make a small profit, instead of being greedy, save it and wait for the next opportunity. So far we have learned how to get fast and accurate scalping signals using the combination of EMA 10 and EMA 17 on the 1-minute time frame. Then we realized that by adding the Fibonacci tool, we can both make our entry points more secure and have clear exit targets. Finally, we focused on one of the most important parts of scalping, which is risk management, because without it, no strategy will be profitable. This strategy is a simple, practical, and workable combination that is suitable for both novice traders and those with more experience. The key is to always do it calmly and systematically, and never enter the market without a stop or capital management. So the next time you sit down at the 1-minute chart, remember to first look for the EMA cross, then draw the Fibonacci, and finally enter the trade with risk management. These 3 steps can make a big difference in the outcome of your trades. If this tutorial was useful to you, subscribe to the channel now and like the video so that I can get energy and share more strategies with you. Also, don't forget to write your experience in the comments, because it may help others too.